Hi, everybody. Dave Sullivan here, part of the marketing department at People Driven Credit Union. This is our 5th day Homebuyer Bootcamp. We actually have some great guests here that have agreed to come on and talk a little bit about what happens on the closing day. Christina, could you introduce yourself for me?
Sure. Hi, I'm Christina Kass. I'm president and partner of Vanguard Title Company. I've been in the business, I think, 33 years this year. I absolutely love it and love helping people get into new homes.
Excellent. And Amanda?
My name is Amanda Shamoun. I'm the commercial division manager here at Vanguard Title, and I've been here about 4 years. I've been in the title business for about 22 years, and I love my job. I love working in the residential realm as well as the commercial realm to get people's deals closed.
You guys are a partner of ours at People Driven Credit Union, and we're very happy to have you working with us on most of our closings that we have at People Driven Credit Union. One of the few things we're going to cover today is kind of an overview of what to expect at the closing table, what a title company does for you before and during the closing day, closing costs versus down payment, and maintaining your home moving forward, which you guys may or may not have opinions on. And then a Q&A session at the end. And as I stated earlier, this is our 5th class, the final class in the home buying process that Sierra and I and many featured guests have worked on. And I think it's brought a lot of value. So if you haven't seen the prior classes, you can always go to our website and search for the Home Buyer Bootcamp in the search, and all of the classes will be recorded and provided there. Okay, so let's talk a little bit about Vanguard Title Company.
Great. Well, thank you. Vanguard Title was started in 2005, so we're celebrating our 20-year anniversary this year. It's an incredible company who really cares about its employees, and we just work like a family here, and we take great care of our customers because our employees are happy to work here, as Amanda already stated.
You know, it says you've been in the business for 30 years. It certainly gives you a perspective of the boom and bust cycles that we've been through in the past. What do you think makes this cycle a little bit different than maybe what we saw in 2007, 8, 9, 10?
Well, I think a lot of people have a lot more equity in their homes than they did in those times. And we don't have that significant loss of jobs and things that were happening at that point. Also, our interest rate is still pretty low, even though, considering back in 2020, it was the lowest that I've ever seen it, 2021. But they're very good rates considering, we go back to, when I first bought my house, it was 10.75%, my first home. So, we still have really, really good interest rates and people are still working. And I think that people are always going to be moving. They moved even back in 2007 and 2008. But I think it's a really good time to buy right now. There's a lot more on the market.
Christine, I completely agree with you. And, another factor would be the level of underwriting that's gone into the group of homes that were mortgaged since 2008 and 9. It's been a much higher quality of loans than we were doing prior to that. So I think it's going to be a different kind of a market. I don't expect there to be a significant drop in home values. If I knew for sure, then I would certainly wager on that, but I will not.
Yeah.
So you guys, obviously, if you've been around that long, you've had a commitment to excellence, right? You've always obviously provided a good service. Why don't you tell us a little bit about what a title company does when you get an order from a mortgage company or a credit union?
Yeah, sure. We receive the order forms from either the realtor or the lender, and it outlines the type of transaction that we're going to do. So if someone is purchasing a home, we're going to get a email from whoever is referring us to that transaction and a purchase agreement, which is going to outline exactly what we need to know to open up that order. It's going to include the property address. It's going to include the parties. So it would be the buyer and the seller, the real estate agents, a lender, any attorneys that might be involved, the purchase price, and it outlines the conditions that have to be met in order to get to closing. And then at that point, we go ahead and start what we call a title search on the transaction, or on the property. And we examine all of the property records in the state of Michigan that show anything to do with that particular property and also the current owner. And we just make sure that if there's any type of encumbrance or lien against the property, that it's listed on our title commitment when we send it to our customer. And the title commitment is essentially a promise to insure. So it's saying if you meet all of these conditions, then we can go ahead and close and insure your title at the end. And then you'll have peace of mind that you own this property outright. And no one will come knock on your door a little bit later on saying that they're owed money.
Do you think that a homeowner could have a lien placed on their property without their knowledge?
It absolutely does happen. Unfortunately, it
What would
does.
be an example of that?
Well, there could be maybe somebody, well, there's a few different things. There could be fraud where someone could pretend to be the owner of the property and deed it to someone else. That happens a lot if the property is not occupied at the time. So the homeowner still owns it, but they're not living there. Maybe they went to Florida for the winter, and someone could pretend to be that homeowner and deed it to someone else. That's an extreme case of seller fraud. There could be maybe they were entangled in some sort of a dispute with a purchase agreement, and somebody might have tried to put a lien against the property because of that purchase agreement, even though the property wasn't conveyed. There could be heirs that were out there that found out that a property was sold and they didn't rightfully get their share of whatever inheritance there was. So those kinds of things we look for when we're searching the title, but then we clear them before we get to closing so that that new homeowner doesn't have anything to worry about. If something happens afterwards, they can always come to us and we can talk to them about what their abilities might be.
Let's say a contractor came and did some work on the property, and then there was a dispute with the homeowner and they decided not to pay them. Now the contractor puts a lien on the property and the homeowner wants to now sell the property.
I'm gonna let Amanda answer that one because she's more into the construction.
Okay, Amanda. So I'm the homeowner. I have some work done. I don't like the work. I don't pay them. They put a lien on the property. Now I want to sell the property. What goes down in that scenario?
So it depends on timing a little bit. There's a statute of limitations in Michigan where contractors have 90 days to file a lien after the last day of furnished work. And so we would ask questions. The first thing we would do is ask questions. When was the last time that the contractor was on the property? Is there a sworn statement for work? Are there waivers? If it's just dispute and the contractor filed a lien and the lien is valid and the time frame for the statute of limitations has not run, then the homeowner would be expected to pay that lien off before we would close.
Okay. So I would have to say that, all right, I'll want to sell the house. I'll have to pay the lien, or could I negotiate with the
You could
contractor?
negotiate, and as long as they discharge their lien, we would accept their discharge in exchange for the payment that they're accepting.
Okay, good. Is there anything people can do about home title theft? Like, is it safer to have a mortgage on the property, or does that not protect you at all from having someone and try to fraudulently take the property from you?
There's a couple of things that they can do. A lot of counties in the state of Michigan have alerts if something is recorded against your property. So you can go directly to those register of deeds, which is, in the county buildings of each county. And often their websites will tell you a little bit, but you can call and see if they're a participating county where they will alert you. You can always ask a title company, hey, could you just look and see if there's anything funny, going on here? And there is searches that are available for that. There's a policy that we offer. It's called the homeowner's title insurance policy. If you purchased that when you bought your home, it's a little bit of an upgrade. It's about 10% more. That will cover future fraud. So it really is a very, very good policy. And again, it's called the homeowner's policy. So there's a couple different things that you can do to avoid that. Your question about if there's a mortgage, yes, typically that is helpful. If the fraudsters can see that there's a mortgage on the property, they know they're not going to get as much money for whatever they're trying to, swindle. So they're going to look at for vacant homes or unoccupied homes. They're going to look for free and clear properties, and they're going to look for vacant pieces of property. Those are the ones that you really kind of got to watch for. And when we run a title search on those types of properties, we're asking more questions than we used to in the past because of this type of seller fraud.
Okay, I think about my parents who go down to Florida for the winter, and their house is paid free and clear, and they're not there, and I'm sure the neighbors are kind of watching it, but so you're almost better off with a mortgage.
Yeah, you can definitely help. So yeah, there's options out there though, and if that's something that they want to discuss, we'd be happy to talk to them about that.
Well, I appreciate that, and that's definitely a good upgrade. I would definitely take you up on that. It's not much money, and to have that kind of assurance on it is well worth it.
Mhm.
All right, so let's talk a little bit about what to expect on the closing day. A lot of people are intimidated. They put in their blood, sweat, and tears to find the house and qualify for the mortgage, and finally they show up at the closing day, and then there's a surprise. No, hopefully not. But what should they be doing as the closing day approaches?
We're becoming more and more involved with both the buyer and the seller directly when we're moving through the transaction. And we're going to be asking questions that are private and personal information from them to be able to help clear the items that are on the title commitment. And so don't be afraid if the title company calls you, just make sure that it's the title company that you were recommended to use, because it is very important that we get the information from you and we get it timely so we can clear the title requirements. We call it curative way before closing. So we're not trying to jump through hoops a couple of days before. Title companies are very friendly. They're very knowledgeable, and they just want to help everybody get to the closing table. So documents that we would be asking for are payoff authorizations to pay off a current mortgage. That would come from the seller. We would have them fill out that information. We would send them portals to receive and give wiring instructions. That's very important. There's homeowners associations out there. We need to get information on whether or not the dues are current and if there's any special assessments, things like that. If there's anything else that's unusual on title, like maybe there was a death in the family and we need to record a death certificate, we would need a copy of that in advance. If there's a divorce or a trust, we need those documents in advance to review. We have our attorneys and our quality control people look them over and make sure we have everything so that the seller can convey to the buyer properly at the time of closing. So we're moving through that 30 to 45 days that it takes to close, bringing all of this information in and then reviewing it and then letting them know if they need anything else. And on the buyer side, the buyer is really working with the lender mostly, but we will need to provide them wiring instructions. And something else that is really important is to make sure that they're not receiving wire instructions by email. And if they get wiring instructions by email, not to follow that wiring instructions, because it could be a fraudster as well. We're talking about a lot of money, and we want to make sure that our customers are safe. And that's why we use safe portals to communicate with our buyers and sellers.
Yeah,
And
wire
that's,
fraud is a big problem, and it's very final. Once you wire the
Mhm.
money's gone. So you've really got to take that extra step and know that you're wiring it to the proper account. Now, you have a private portal, meaning it's not really email, right? They would log into your portal to
yeah,
view the message.
yep, we have two portals. We have one that we ask them for information so that we can order payoffs and HOA status letters and things like that. And then we have another portal that's strictly for collecting or giving wiring instructions. That one is texted and emailed, the portal is, but they don't send those wiring instructions through email. So they have to verify their identity and make sure that it is the person that we sent it to. And then they get approved to be able to retrieve those wire instructions.
Good.
Yeah.
Yeah, you really, as a home buyer, you've got to have your radar up as high as possible because for whatever reason, the fraudster might know that you're in the process and you're expecting this.
Mhm.
So you need to be very careful about where you're going to send your uh, wired money, I should say.
Yeah, and that's one of the last steps right before closing. They'll be wiring the monies. The documents are prepared once we've determined that we have everything that we need to convey title properly, and then also everything from the lender with all of the documents prepared that need to be signed. The settlement monies are balanced, both buyer, seller, and lender. We usually send a package 24 to 48 hours before the closing time for the customers to review. And then once they've reviewed, if they have any questions, they can feel free to call us. But then we will all sign in front of a notary. It doesn't necessarily all need to be together. The buyer can sign, with a notary, and the seller can sign with a notary, or everybody can come to the table and they can all sign together. But we give a brief description of each document that they're going to be signing at the table. And then they sign it, and then the notary signs it, and they just go through however many documents there are. And then we give a few copies after closing, and hopefully the keys are exchanged and the seller gets their check, and people can go and enjoy their new home.
There was a time when you were not required to get the documents before the closing date, but there is a requirement to do that now, correct?
Yeah, on the lender side, the lender has to provide the final closing disclosure I think it's 3 business days prior to closing. But what we have found is that the lenders are doing such a great job of producing that closing disclosure with all of the fees throughout the transaction. So they're getting it well before the 3 days before the closing. So we've really appreciated that. I think we were a little nervous when that rule came in to play, but we have not had any problems. Very few problems do we see with lenders not getting that information out to the buyers on time.
So from the buyer perspective, they would walk into the closing table, they would sign the documents that they should already be familiar with,
Mhm.
and then they would get the key normally, right?
Yep,
And
and if
then
we're
that's it.
and if we're all at the same table, the seller gets their check, the buyer gets their key, and then if the seller's moved out, they can go, move their stuff right in.
Yeah, that's the fun part.
It is the
Yeah.
Yeah, it can be a long process and a grueling process. And one thing that you mentioned earlier that I really think that is important is that if either the title company or the mortgage company or the inspector or the realtor or anybody asks you, the borrower, for information, you should get it back to them right away.
very,
There's a
very,
Yeah.
reason that they need that information, and the longer it takes to get that information back, the longer that the closing process will take. And
Right.
it's really
yeah.
important
And
that you do that.
from a credit union perspective, you're holding their interest rate for them a lot of times, and that has an expiration date. So if they don't get you the information, they might not be able to close. prior to that interest rate expiring. So I know that's really important from the lending
Right.
side of things. Sure. Amanda, do you want to comment on any of this, or would you like me to keep going?
Well done. Amanda, go ahead.
No, so the down payment they're different. Down payment and closing costs are different. So down payment is whatever is agreed upon on the purchase agreement to put down on the home. And then the rest of the price of the home is done by financing through the lender. So that's completely different. The closing costs are the costs associated with closing the loan given by the lender, as well as the closing costs from the title company. The title company closing costs, there's title insurance that is provided. There's a seller's cost associated with the owner's policy. And then there's a buyer's cost associated with the lender's policy that insures the lender for their first lien position on the property. There's also closing fees associated, recording fees for the deed and for the mortgage. And then the seller has transfer tax to pay for the conveyance, as well as ancillary fees to close up the transaction. And then the lender's fees obviously are stipulated by the lender. So all of these fees are disclosed. The title company gives the fees to the lender produces the pre-CD, and they're all disclosed prior. So there should be no surprises at the table. We pride ourselves in not having surprises at the table. We want the table to be a celebration and, a happy ending to a very stressful process. Usually it's the biggest purchase that most Americans will make, and we love being a part of it. It's a huge privilege for us to be a part of it.
Amanda, one of the things that kind of come up when people close, they don't realize is the taxes, how the taxes are held and how they're handled. Can you explain a little bit about the property taxes and what's collected? I believe it's a year up front, correct?
That's generally stipulated by the lender. So,
okay.
Chris has more experience in the residential world when it comes to escrowing. So is it usually a year?
Yeah, it's 12 to 13 months that is collected, and it's usually collected in two parts. Some of it is going to go into the escrow account for the payment of future taxes, and some of it is going to be paid to the seller for reimbursement that taxes were already paid. And essentially, they have about a year in advance that they have paid, either through the escrow account or giving to the seller, depending on what time of year we're in and when the taxes are due. So yes, that is accommodated. Even in the pre-CD, often you'll see those taxes already included in there. And that is only put in the escrow account if the taxes are going to be held in escrow. Some borrowers are allowed to not have an escrow account and they like to pay their taxes on their own.
If you are escrowing, though, that can be a substantial amount of money that people aren't really thinking about when they're going to close. So you should keep that in mind as well, I would say.
And a lot of times they should also realize that the taxes are going to be different when they purchase the home than what the seller is paid, because in certain areas, there are taxes that are lower for different reasons, or the seller's been in the home for a long time, and so the tax base is lower. And it will increase with the new purchase price of the property. And so usually credit unions make sure that they know approximately what the taxes are going to be, and that's how they approve the new monthly payment for the new buyer.
Right. The taxes become uncapped, correct?
That's
And then
exactly.
they're reassessed at
Reassessed.
the new market value because the government needs to get paid. So really maintaining your house moving forward, I can speak a little bit about this, but a regular check, hopefully you've already had your inspection done. So all these things should be either up to date or functional. I would encourage a home warranty, wouldn't you guys? To cover.
Yeah, of course.
Yeah, home warranty is great. Covers you for things like your HVAC, your furnace, your roof, things like that. Especially at this time of year, you want to make sure you keep all the gutters and the downspouts moving the water away from the foundation of the property. The inspector actually said that that was the number one cause for water infiltration into the basement is not running the water away from the base of the house. And then home ownership costs. You already mentioned that the property taxes will become uncapped. Insurance has not gone down over the last few years, correct?
Nope.
No. So utilities, HOA fees should be, you should know what the HOA fees are already, but utilities can range depending on how much you use them. And then long-term improvements. All right, guys. Well, I really appreciate you guys being here. We're right on about the half-hour mark. So Sierra, unless you have a question.
No, I think they've covered everything. Thank you guys for sharing all that information.
Thanks, Sierra.
That was perfect. We appreciate your partnership and we look forward to continuing in the future.
You're welcome.
Thank you so much, Dave. We appreciate you.